What's the fastest way to turn $1,000 into $1,000,000? No, it's not winning the lottery, it's investing in the right stocks. We're talking about companies with the potential to absolutely explode in the next few years, the kind of growth that can transform your portfolio from meager to magnificent. Think about it. What if you had a crystal ball that could tell you the next Amazon or Tesla? You'd be set, right? Well, today, I'm going to try to be your crystal ball. We're diving deep into 7 companies, a leader in cutting-edge medical technology, a pioneer in regenerative medicine, a semiconductor solutions giant, a titan of luxury home furnishings, a natural gas powerhouse, a real estate investment trust leader, and a renewable energy trailblazer, all poised to dominate their respective markets and deliver massive returns. If you only watch one video today, make sure you watch this one, all the way till the end. We're talking about potentially life-changing gains here, folks. So, buckle up, grab your notepad, and get ready to take some serious notes because this is information you won't want to miss. And hey, while you're at it, hit the like button. Let's get 1,000 likes on this one. Share the video and leave your thoughts in the comments and subscribe so you don't miss out on the next important financial investing update. Our first contender is a company that's literally saving lives. Artivion, trading under the ticker symbol AORT. Now, Artivion might not be a household name yet, but trust me, it's one you'll want to remember. Why? Because they're on the cutting edge of medical technology, developing innovative solutions for aortic disease. We're talking about a market with huge unmet needs, and Artivion is stepping up to the plate with groundbreaking products. This isn't some fly-by-night operation either. Artivion currently boasts a market cap of $1.3 billion, and they're just getting started. Their latest earnings per share came in at minus 0.02, and when you look at their PE ratio, it's currently sitting at minus 1369.91, suggesting that investors are willing to pay a premium for AORT's future earnings potential. Now let's talk numbers. In their most recent quarter, Artivion raked in a cool $354 million in revenue for 2023. And while their net income came in at minus $30.69 million, remember this is a company that's heavily investing in research and development. They're playing the long game, and that's exactly what you want to see in a company with this much potential. Think about it. As their innovative products hit the market and gain traction, those revenue numbers are only going to climb higher and higher. I'm confident that Artivion is well positioned to capitalize on this massive opportunity. This isn't just about making money, it's about investing in a company that's making a real difference in people's lives. And that, my friends, is a winning combination. Keep your eyes on Artivion, because this is a company that's going places. Alright, moving on to our next game changer, Vericel, trading under the ticker symbol VCL. Now, if you're looking for a company that's at the forefront of one of the most exciting fields in medicine, look no further. We're talking about regenerative medicine, folks, the ability to repair or replace damaged cells and tissues. Vericel is a leader in this space, developing cutting-edge therapies that have the potential to revolutionize how we treat a wide range of diseases and injuries. Think about it, what if we could harness the power of our own bodies to heal ourselves? That's the promise of regenerative medicine, and Vericel is leading the charge. Now let's talk about Vericel's revenue. With a market cap of $2.89 billion, EPS of 0.08, PE ratio of 778.46, revenue of $197.52 million in 2023, and net income of negative $3.18 million, this is a stock you'll definitely want to keep on your radar. Their numbers tell you everything you need to know about Vericel's growth trajectory. They're not just developing groundbreaking therapies, they're successfully bringing them to market and generating significant revenue in the process. But here's the thing that really excites me about Vericel. They're just scratching the surface of what's possible in regenerative medicine. As they continue to innovate and expand their product portfolio, I have no doubt that their revenue and profits will continue to soar. Vericel is a company that's not only pushing the boundaries of science but also delivering real value to investors. Alright, moving right along to stock number 3 on our list, Semtech Corporation, ticker symbol SMTC. The company designs, develops, manufactures, and markets analog and mixed-signal semiconductor products and advanced algorithms. It provides signal integrity products including a portfolio of optical data communications and video transport products used in various infrastructure and industrial applications. The semiconductor market is inherently cyclical, with periodic fluctuations driven by global demand, capacity constraints, and shifts in consumer electronics and industrial demand. Their continuous investment in research and development and the ability to innovate remains central to maintaining a competitive edge in niche markets such as LPUON and other specialized applications. Semtech Corporation's stock performance is influenced by a combination of industry-specific cyclical factors, innovative capabilities, competitive dynamics, and both macroeconomic and geopolitical considerations. In the short term, volatility may arise from semiconductor cyclicality and global economic uncertainties, compounded by geopolitical risks affecting supply chains and market access. In the long term, growth prospects appear promising, driven by secular trends like the increasing adoption of IoT and energy-efficient technologies. However, sustained growth will depend on the company's ability to continue innovating, managing competitive pressures, and navigating regulatory and geopolitical complexities. Now let's take a closer look at Semtech's financials. Their current market cap is at $5.77 billion, with an EPS of minus 13.05, a PE ratio of negative 5.13. In their latest fiscal year, they pulled in over $869 million in revenue, which is nothing to sneeze at. And while their net income ended up at negative $1.09 billion. But here's something else that caught my eye. Semtech also offers a dividend, currently yielding around 2.79%. Now that might not seem like much, but it's something to consider, especially if you're looking for a stock that can potentially provide some passive income on top of capital appreciation. Of course, past performance is not indicative of future results, and there are always risks associated with any investment. But when I'm looking at a company like Semtech, with its strong position in a growing market, its history of innovation, and its commitment to returning value to shareholders, it definitely piques my interest. So, do your own research, consider your own investment goals, and decide if Semtech is the right fit for your portfolio. Remember, I'm not a financial advisor, so do your due diligence. But for me, Semtech is definitely a company worth keeping on your radar. Alright, let's move on to our fourth pick on this list of potential stock market winners by 2025, RH, formerly known as Restoration Hardware. Now, if you're into high-end furniture and home decor, you're probably already familiar with RH. They're all about creating those stunning, timeless pieces that just scream luxury. This isn't your average IKEA run. We're talking about handcrafted dining tables, plush sofas, and statement lighting that could make even the most modest apartment feel like $1 million. And with a market cap of $7.8 billion, RH is clearly doing something right. One of the reasons I'm so bullish on RH is their dominance in the luxury market. They've managed to carve out a unique niche for themselves, catering to affluent customers who are willing to spend top dollar for quality and design. And speaking of dollars, RH's financials look pretty good too. Their earnings per share is 3.78 and has been on an upward trajectory, and their price-to-earnings ratio is 110.88, reflecting the premium that investors are willing to pay for a piece of this luxury brand. In 2023, RH reported a revenue of $3.03 billion and a net income of $127.56 million. But here's the thing about RH, they're not just selling furniture, they're selling an experience. Have you ever been to one of their galleries? They're like walking into a magazine spread, with soaring ceilings, natural light pouring in, and perfectly curated vignettes that make you want to move right in. They've even started incorporating restaurants and wine bars into some of their locations, creating a truly immersive experience for their customers. This focus on creating a unique and aspirational experience is what sets RH apart from the competition, and they're not stopping there. RH has ambitious plans for expansion, both domestically and internationally. They're opening new design galleries, expanding their online presence, and even venturing into the hospitality sector with plans for RH-branded hotels and residences. Now, I know what you're thinking. Luxury goods are often the first to go during economic downturns, and that's a valid concern, but RH has proven to be relatively resilient. Even in the face of economic uncertainty, their affluent customer base tends to be less impacted by economic swings, and their strong brand loyalty keeps customers coming back for more. Alright, for our fifth pick, let's shift gears and talk about energy. Specifically, let's talk about natural gas and one company that's leading the charge in this space, EQT Corporation, ticker symbol EQT. Now, EQT is a giant in the natural gas industry with a market cap of $30.5 billion. They're focused on natural gas production, gathering, and transmission, primarily in the Appalachian Basin, one of the most prolific natural gas formations in the world. As we all know, the world is moving towards cleaner energy sources, and natural gas is often seen as a bridge fuel in the transition away from coal. It's cleaner burning than coal, and EQT is committed to responsible natural gas production, focusing on reducing emissions and minimizing their environmental impact. Now let's talk numbers. EQT's market cap sits at $30.5 billion. The company has been a cash flow machine, generating $5.07 billion in revenue in 2023, with a net income of $1.74 billion. Their earnings per share is 0.92, and their price-to-earnings ratio, or PE ratio, is 55.47. Additionally, they offer a dividend yield of 1.23%. And here's something else I love about EQT, they pay a dividend. In fact, their dividend yield is currently sitting at a juicy 1.23%, which is pretty attractive in today's market. So, not only do you have the potential for capital appreciation, but you're also getting paid a decent dividend while you wait. Now, of course, the future of natural gas is not without its challenges. The energy industry is constantly evolving, and there are always political and regulatory factors to consider. But EQT is well positioned to navigate these challenges. They have a strong asset base, a commitment to innovation, and a focus on responsible energy production. And let's not forget about the global demand for natural gas. As economies grow, particularly in developing nations, the demand for energy is only going to increase. Natural gas is expected to play a crucial role in meeting this growing demand, which bodes well for companies like EQT. So if you're looking for a company with a strong track record, a solid dividend, and the potential for long-term growth in a critical industry, EQT is definitely worth a closer look. Alright guys, moving on to stock number 6, we've got the Geo Group, trading under the ticker symbol GEO. Now the Geo Group is a leader in private prisons and community-based services for offenders. And let me tell you, this is a market with some serious demand. With a market cap of $4.41 billion and an EPS of 0.26, GEO has a PE ratio of 121.19, which, when you consider the nature of their business, is something to pay attention to. This isn't some tech startup with a crazy valuation. This is a company with a real tangible business model. Now let's talk financials. Their revenue is sitting at $2.41 billion in 2023, and they're pulling in a net income of $107.33 million. Remember, past performance doesn't guarantee future returns, but these numbers definitely paint an interesting picture. The Geo Group has a controversial reputation, but they're a major player in a growing market. As always, do your own research, understand the risks, and remember, this is just one piece of the puzzle when it comes to building a diversified portfolio. One thing that really stands out to me about the Geo Group is their focus on rehabilitation programs. Look, I know private prisons can be a sensitive subject, but GEO is making an effort to reduce recidivism rates by offering things like educational and vocational programs. And, let's be real, the demand for these services isn't going away anytime soon. Unfortunately, the reality is that the prison system is a growth industry, and GEO is well positioned to capitalize on that. But, and this is a big but, you have to be comfortable with the ethical implications of investing in this sector. It's not for everyone, and I totally get that. Ultimately, the Geo Group is a company with a strong track record in a growing market. Are they a perfect company? No, but they have the potential to generate some serious returns for investors who are willing to do their homework. Alright everyone, buckle up because stock number 7 is going to electrify you. It's GE Vernova. This is the renewable energy spin-off of General Electric, and let me tell you, they're poised to be a major player in the future of energy. We're talking wind power, grid solutions, and even nuclear energy. GE Vernova is a powerhouse with a market cap of $102.79 billion and an EPS of 5.65. Now their PE ratio sits at 66, which reflects the growth potential of the renewable energy sector. Their revenue is currently at $34.94 billion, and they're bringing in a net income of $1.55 billion, showing they're not just about saving the planet but also about making money. Plus, they offer a dividend yield of 0.07%. Now let's talk about why GEV is such a compelling investment. For starters, the demand for renewable energy is only going to increase. Governments around the world are setting ambitious clean energy targets, and companies are feeling the pressure to reduce their carbon footprint. GE Vernova is perfectly positioned to benefit from this global shift. They have the technology, the expertise, and the scale to become a dominant force in the renewable energy market. Plus, with their strong dividend, you're getting paid while you wait for the stock to appreciate. But remember, investing in any stock comes with risks. It's crucial to do your own research, understand the company's financials, and consider your own investment goals and risk tolerance. Overall, GE Vernova is a company with a bright future. They're at the forefront of a rapidly growing industry, and that's something I always look for in a long-term investment. And there you have it, guys, my top 7 stocks for long-term growth in 2025. Remember, these aren't just random picks. These are companies with strong fundamentals, solid track records, and huge growth potential. But finding these hidden gems takes time, research, and the right tools. If you want to take your investing to the next level, Forecaster is the tool I trust to find incredible stocks like these. Don't wait, try it for free today. Use the link in the description and code Galore10 to get started. And hey, if you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the Stocks Galore Patreon today and take your investing game to the next level. Our members there get full in-depth analysis on most of these stocks I mention here. Head over to patreon.com/stocksgalore and become part of our growing community of smart investors. Link is in the description. As always, don't forget to smash that like button, drop your thoughts in the comments below, and subscribe to the channel for more awesome investing content. Until next time, happy investing.